All right. Good morning, everyone. Happy Tuesday. Right. Yeah. Shut me up this long holiday weekend. Again, as always, we're going to do a broad market outlook, go over some top ideas, and then any member ideas that you guys have, we will go over those as well. So again, last week, and I did send a big picture out earlier this morning. It's pretty, everything, all the major sectors and markets pretty much had a phenomenal week last week. It was very reassuring to see, given that for the last month, it seemed like we were just going to continue to head lower, forever and never get a bounce. And we finally started to get one last week, which was good to see. And most importantly, I'm trying to highlight like these arrows here is that we put in like a higher high, relatively speaking. Obviously, that little recent base that we were in, it's good to see where the buyers are stepping up and wanting to push the market higher, which is a good sign. But we also don't want to be coming in, markets down a little bit pre-market, but fourth, fifth day up, it's very hard to come in here and want to go crazy. But this is a good time where if you were trapped in positions, and I use the example in the big picture where consumer staples got really banged up last week. We had Walmart's earnings got a lot of those like consumer staples, their earnings were really bad. Target and all those, that sector got pretty smoked. And this is also the time when people want to make those emotional decisions of let me get out. It's going to go to zero, not zero, but you guys know what I'm talking about. When if you can wait for these bounces, then you can avoid that emotional reaction and then just find the time to unload it for more of a manageable loss or break even, or sometimes even a tiny gain. So this is like what we're seeing with the staples, what we're seeing with the broad markets, is if you're in positions now that you say you got trapped in this initial down move, like you're preparing for this 430 break, which even myself as well was in that camp of looking to buy through here, and you got in early and you got kind of stuck in this little chop, this bounce back up to this 430 area, these are the times when it's easy to unload stock. You get these bounces here. You don't want to in the moment because everything looks amazing. But when we get these little like relief rallies after these pull-ins, that's when you kind of want to free up some stock. But again, all the major sectors, again, energy breaking out to new 52-week highs. Utilities kind of right behind them, and then everything else is kind of just in the middle of no man's land. Materials, middle of its range, but broadly still looking very good given how a lot of the major just broke down. Materials still just flying up here, couldn't be more perfect, but not really a lot of actionable spots to buy any of these major sectors right now, given the last week's run up. The biggest thing for us to continue to focus on is the fact that the 10-year and the treasuries have pretty much topped out at kind of the spot that we talked about for the last couple of weeks here. We in prior chart talks and these pre-market calls, we've discussed this like 3.3 area in the 10-year that, just like any stock or any market or any index, when you get at these major levels and it hasn't traded above this in nearly 7-8 years, that's a major resistance level. And as fast as it's gotten up here, it's hard to sustain that. If this was like a much more gradual grind back to 3.3, we could expect it to continue that trend. But when it has that very parabolic, almost like Tesla type move, it's hard for these, for any security to sustain these types of moves. Like as quickly as it's going to bounce, run up vertically, just as quickly as it's going to come back down. And for me recently, I've been talking with like a lot of realtors, a lot of mortgage lenders who are in this space where like interest rates are very sensitive to their business, and most aren't aware. Like it's just none of them really watch the 10-year, which that's a big component of the mortgage interest rates. And most think we're going to stay in these 5 and 6% rates for the foreseeable future. And then I say, like, well, we're already starting to roll over. The 10 years already starting to roll over, and I can show them the chart. And they're like, oh, I didn't know that. So it's just like the crowd is still, or the professionals in this industry still aren't aware of the shorter term dynamics of how these things move. But we can still see, if this continues to kind of continue to roll over, we should expect the equity market to continue kind of catching a bid, and inching higher. So that's the main focus of just kind of keeping on the 10-year. Individual And again, wrapping up with the big picture again, telecom still getting smoked, biotech still very clear breakdown stage, very big avoid until it can get out of this downtrend. So those again, last two for the big picture. Moving on to top ideas, this HOLX, not a blue sky breakout, but very nice entry level through this 80. Probably going to take some time. For now, it's kind of versus 75 area, and you can have your first little like retest area at this 85. So I kind of want to see this tighten up more. I don't really want to buy this and have a one-to-one risk reward, but in a few weeks or a month or so of this, I can find it, buy through 80 on $1 risk and looking to kick into that 85, something to keep an eye on. And then more big picture M1 type of ideas, this Amazon, pulling into macro support, this macro trend line, kind of versus 2000 and not trading, not swing trading it, but just, being aware of this price point. And if this isn't in your buying weekly on M1 and you have a profitable position in another name, this could be a time to take some profits in any name that you are up in and increase the allocation marginally in a name like Amazon. And same like Match.com, coming into this like macro support area. It's held here. This has been kind of the major trend for a couple of years now, and looking to buy up versus area or increase the allocation related to M1 is something that I'm looking to do in both these names. Unfortunately for me, though, I don't have any individual stocks right now that I'm up in overall that I can rebalance. So I have to just continue to buy them evenly every single week. But if you do have any profit positions and you're in one of these two names, these could be spots to increase the allocation. So that's really it. Again, a couple of winners from last week that some of you guys were calling out. This ALB did very well. FANG did very well last week. EXC, there's 48. Very nice little breakout. And this MCHP that I remember called out. Can't remember who. So a couple of good calls from last week that are all trading higher. And that's my little speech for my few minutes. Heaven, if you have any ideas you want to go over some number of ideas, definitely go over those now.
Yeah, definitely. In regards to long-term stuff, kind of in the same boat as you, where I didn't really have a ton of major winners to take my profits from and rebalance it into the losers. But I did decide to just add a nice chunk of money into my Roth last week, give it a little boost. Think, who knows, this might be the bottom. I don't really know, but I figured it was a good moment to just add a little bit of money since I had some. Stock wise, I have a few on my list, but kind of like you said, 4 days up, I'm not really too eager to jump in, especially, last day of the month. I think it's psychologically, I'd much rather kind of watch what happens today and then kind of reset for June. But I do have a few things on watch. The first one is TRP. So oil and gas name, just sort of flagging here under 58 after a solid move off of those lows from a few weeks ago. It's tested this area a couple of times before. So, and it's fairly tight. I mean, I'm looking to buy it through 58 with a stop under 56.50. Yeah, as you can see, really, really macro level from 2015. So I like this one a lot. It's probably my favorite coming into the week.
This looks amazing. As I kept zooming out, I'm like, oh, just kept
oh, another one. Oh, another probability. Nice. Yeah. So it looks really good, sitting above all the moving averages. Volume has kind of been drying up a little bit. So it seems like there's, people are kind of getting bored of it, which is always the moment that it tends to blow up. So yeah, definitely keeping a close eye on this one for this week. Another one that I really like is this VAL, Valaris Limited. Obviously fairly new stock, pretty recent IPO 2021, but been in a strong uptrend. These tend to rely a little bit less on the overall market. So it's just nice to see a high and tight flag here. I mean, if you follow Minervini and his VCP pattern, this is exactly what that is, volatility contraction. A lot of volume on Friday, despite kind of a doji at highs here, which is kind of off-putting, but I'm looking to buy this one through 61, stop under 58. What else do I have? I have a few other ones that are still just continuing to set up. This J&J, kind of forming a little handle here. Looking to buy through 182. And a few others, but those are just not completely ready yet. And we have some member ideas as well. Christopher's got two. He's looking at D. And this
I'm
is
here.
actually on my list as well. D, just D.
Oh, just it.
Yeah.
Dental Corporation?
No, that's the wrong D. Dominion Energy. Yeah, not that. I don't even know what country that is, but yeah. So looking at this one through 85.25 or 85.50.
Yeah, looks good. The
Yep.
big thing is like, it's just that we mentioned for a lot of the sectors is that a lot of the names have been in this like little base.
Mm-hmm.
And it's like, we're rushing in the retest, and now it's like the higher probability of it pushing out through the space, which is exactly what we want to see. Utilities have been very strong, not as strong as energy, but basically in second place. So definitely a good spot to be looking at for sure.
Yep. Next one he's got is XEL, which I know we've spoken about a couple times, through this 76.75. Weekly chart looks solid because it retested that level back in 2020. So
yeah, a lot of these energy names. Oh, some of the utilities names. Sorry. Yeah, looks very good.
Mm-hmm. Then Kush's got two. He's looking at SMCI.
SMCI.
Yeah, through 50. This one looks like it's gapping down to 47 right now. So we'll see where that opens. But I can kind of see what he's looking for, kind of just like that pivot. I feel like you do have to give it to 47, which makes it kind of tough because you're risking $3 on a $50 name, which is a little high. I think this one could definitely use a little more time. But I mean, really nice earnings reaction because that gap up is on earnings May 3rd, and it's sort of holding that level. I mean, it kind of shook out those earnings day lows and then bounced. Which kind of could probably have shook some people out or trapped some shorts. So there could be something here, but I don't know, with this gap down, it might be a little difficult, but one to keep an eye on for sure. The other one he's looking at is GNK.
GNK.
Yeah, through 25.50.
Good. So I hate the shipping companies, and just like a stock like this, like short term, what he's looking at, I see what he's looking at here.
Mm-hmm.
But the problem is this thing has just been so dead for so long that it's just not worth. Like everyone who's bought this stock since 2015 hates this name with a passion.
Mm-hmm.
That's not going to change anytime soon. That this is just one that I wouldn't waste $1 of my money on a marine shipper that is still. This clearly is not a successful company if it's been more than half a decade and they can't even get near their, this was like years ago when marine shipper, like now, like NFTs are a joke, when like 6 months ago it was, revolutionary. The wheat stock era, 3D printing, I'm dating myself a little bit, the marine shipping companies were big years ago, and I would just hard pass.
Yeah. And I mean, just kind of chart wise, this kind of just obviously completely different companies, but this reminds me of when people wanted to be buying Snap at like $10, $15. And you were like, just wait until it gets back above IPO highs. Like, stop, it's like, this thing is a loser until it gets back there. And then eventually, when it finally did get back those IPO highs in 2020, it blasted off, obviously given a really strong market as well, but kind of same situation here. It's like, you could try to like, fight through this trading action here, or just sort of wait. If it ever does get back to IPO highs, then you'll probably have a much better risk reward opportunity than trying to buy this one with a ton of overhead resistance.
In this, it's like you're buying 26 versus 23, you're risking 10% of shit stock, or you're trading it properly versus 20. And it's like, you can't find someone to risk 25% in Amazon. It's like, you're not gonna risk 20%. This Genco probably got one ship, this is probably the boat we took in Bimini. Like, this is the company that we took, that little boat.
Oh no. That's the CEO, the pirate.
Yeah.
Got it. Okay, yeah, avoid that one. Fred says in the comments, he just wrote, shipping wise, TRTN looks a lot better.
What is it? TRT.
TRTN, yeah, Triton International Limited. So yeah, macro wise, definitely a better chart. I don't know if there's much of a buying opportunity here with like 3 days straight up into resistance, but yeah, definitely, I agree that this is a much better looking chart than that GNK. Next one, we've got Tom. He's looking at ACHC. I have this one on my watch list as well.
ACHC.
Yeah, Acadia Healthcare. Really nice wedge forming here. Inside day, doji on Friday. I really like this one through that 73 level versus probably 70 for now. But I would, if this broke out today, I would quickly move my stop up to that 71.50, like under Friday's low. Looks really solid, high and tight flag. All-time highs is 85 back in August 2015. So there's definitely some room there. Risking $3 to make 12, 15 bucks is a solid trade here. So yeah, I like this one a lot. Let's see what else we got. Some in the alpha chat here. Mike is looking at HSIC. Yeah, Henry Schein, 86.25. What do you think of this one, Ben?
I mean, if he's buying it, that's all right. I see what he's looking at. 86 versus 85. Yeah. I mean, healthcare has been pretty decent recently. It's got definitely, plenty of room to run in this relative range. It's still like, in the lower end of its range. I do forget, what was the ticker again? So I can go back to it. Okay.
HSIC, sorry. Was it H?
Yeah.
Yeah, HSIC.
HSIC. So yeah, I mean, I definitely see what he's looking at here. Very tight risk, probably also one, if you do get into it, like if this is like an entry or a feeler, you probably got to look to add to this like 87.5 as well. And then look to kind of kick like up into this retest area.
Yeah. This one, I mean, it's kind of one of those that's like it kind of has to go immediately, because if it sits around here, you're very high probability of getting shaken out at that with a stop under 85, just because it's not really a concrete support level. The stock's sort of just been grinding higher over the last 1, 2, 3, 4, 5, 6, 7 days, where real support is down at 82. So unless this actually goes sideways or puts in a higher pivot low, maybe around like 84, where you can really put a stop and then have a nice swing, this one kind of has to go today. And if it doesn't, you probably want to just get out, because it's going to stop you out if because it's so tight here.
I was trying to put these little arrows on these 2 days where it was trying to go up to those 87, like immediately just reverses and close.
Yeah.
And that's like what you're saying. It's like, if it's not going immediately in your favor, like it's coming back to price, it's like, this is probably one just to.
Yep. But yeah, I mean, it kind of is following that same pattern that a lot of good breakouts had last week, where it based out. It made new highs of back in April, then it bases out for about a month or two, and then has a strong breakout. You can look at like AEP or AEE. They had a similar kind of setups where they just kind of based for a couple of weeks and then had a nice like 2-3 day move. So I can kind of see that same thing happening here. We'll see. Next one, he's got NVST through 43.
It's another healthcare name.
Yeah.
We see this little base forming. Good sign. Very tight risk. Buy this thing versus 43 versus 41. Really even 42. Yeah. So dollar. I mean, if you can risk $1 in a name and relative, $40, $50 stock, it's you have definitely the risk board kind of on your side.
Yeah, 44 plays a pretty important role. Seems like
Yeah.
that it's bounced off of that level a lot. So I would expect a little bit of resistance there. But if it can get back above that 44, which is kind of also where the moving, like it's still sitting under its 50 and 200 MA, which to me is always kind of like a red flag, at least for my rules. It, like the criteria doesn't really work. So personally, I would rather wait to see this kind of start to trend above those moving averages and let those moving averages become support instead of them sitting as resistance right now. But definitely want to keep an eye on. I mean, it looks pretty good.
Yeah.
I like that one. And I think that is everything. Let me see if I got any other ones I'm looking at. Yeah, that's what we got from our members.
All right. So again, couple quick things. Again, if anyone hasn't ordered the Kindles, again, we need help with the reviews. If you do order them, I think it's like $8 or $9 for the 3 Kindles, and we will give you a 5-to-1 return on that. If you do that for us, if you do order them, just send me a DM on GroupMe, and I'll make sure I get that 5-to-1 equivalent added. And if we get 100 likes on the last Shark Talk, me and Shake will do the next Shark Talk, hopefully today. We're pretty close to that. And finally, last thing, we're doing a lot of tax return reviews for members who've done their returns with someone else other than us this tax season. And so far, we've found kind of an error or something that we can improve with each person that we've done the recap so far. We don't charge anything for that review. It's completely for free. And if we find a way that we can improve the return, we either tell you what to tell your tax preparer or we can do it for you. So if anyone wants to have a second opinion over their tax return, just shoot me a message. I can send you the link to schedule a time and you can get on a call with myself and our tax preparer. And that's the end of my little speech for this call.
Yeah. Chip says, "Hey Ben, any word on book 4 being printed?"
So we are just finishing book 3, the audiobook. I got actually the email from the guy today. So once that is, the audiobook is up 3 is done, then we will start on book 4. I would say, given the timelines of how long it's taking me to get each book published, it's taking me probably about a month. I would say by the end of June, book 4 should be done. And we are currently working on book 12, which is kind of going into me getting fired from Wall Street. So that'll be more of a story than trading wise, but that'll be one that will come out once we get the other 11 books fully up on
Nice.
it.
Yeah. Okay. Yeah. And pre-orders are open for the Comma Day watches. If you do want one, you're interested in one, you can shoot me a message and I can send you some of the details. We can get you on the pre-order list. You can get a great deal on it. So hit me up with that. No, you don't have it on. You got the real one on. We're not giving you that one. We're not giving you that one.
No,
At least not for now.
All right, guys. Thank you guys for joining and good luck.
Yeah, we'll see you at noon for the Q&As. Bring some questions. See ya.
See you guys.